Investing is simple, but it is not easy. Warren Buffett. This quote from the greatest investor of all time encapsulates a paradox. Although the fundamental principles of investing are accessible, many people complicate the process, either in pursuit of quick gains or due to market noise. Now stop and think. How many times have you wondered if you need complex formulas or advanced technical knowledge to succeed in investing? The truth is that Buffett built a billionaire fortune by following a surprisingly simple approach. He focused on buying shares of solid companies, managed by competent people at fair prices, and then let time and the power of compound interest do the rest. He avoided what he didn't understand, focused on the essentials, and always chose clear and logical paths. But why is this so relevant to you? Because simplicity in investing is not just a sensible choice. It is a way to protect your wealth and reduce the risk of emotional decisions. In a world where many people are driven by complexity, those who master the basics have an incredible competitive advantage. In this guide, we will explore how to adopt the philosophy of simplicity in investing. We will understand Warren Buffett's fundamental principles and how they can transform the way you invest. After all, financial success doesn't have to be complicated. And by the end of this content, you will be equipped with the right tools to build a clear, efficient strategy aligned with your long-term goals. Imagine knowing exactly where to invest without losing sleep, trying to predict the future. Imagine being able to ignore the noise and make decisions that truly make sense for your wallet and your peace of mind. That is exactly what we are going to cover. Stay with us until the end and discover how to identify simple and effective investments, why complexity is the enemy of common sense in financial markets, and how you can adopt a practical and straightforward approach to achieve your financial goals. Simplicity in investing can be the key to your next big step toward financial freedom. Let's discover together how to apply it. One of the greatest lessons Warren Buffett teaches us about simplicity is buy a business that even an idiot can run, because someday an idiot will. This isn't a criticism of business management, but rather a reminder that the best investments are those that don't rely on complexity or brilliance to generate value, focusing on the essentials, knowing what really matters. Buffett believes that a good investment starts with a business that is easy to understand. You don't need to be a genius to realize that people will continue buying soft drinks, toothbrushes, or health insurance. Companies like Coca-Cola, Procter & Gamble, and Geico are classic examples of businesses with simple, essential products and a strong competitive advantage. Now think, are you overcomplicating your investments? Maybe trying to predict complex technological trends or investing in companies you barely understand. If so, it's time to reassess. Buffett applies the concept of the circle of competence, which means investing only in what you know. He avoids sectors he doesn't fully understand, like tech startups, and focuses on what makes sense to him: solid, profitable, and predictable businesses. Why do people complicate? What is simple? The financial market is full of experts, analysts, and gurus who love to create an aura of complexity. This leads many investors to believe they need advanced mathematical formulas or artificial intelligence algorithms to succeed. However, Buffett proves the opposite. All it takes is discipline, patience, and a clear understanding of the basics. He himself says that if you aren't willing to hold a stock for 10 years, you shouldn't even think about holding it for 10 minutes. This approach eliminates the need to constantly trade or try to predict the market. After all, the more you tinker with your portfolio, the higher the chances of making mistakes. Stories that illustrate simplicity. A striking example is the case of Coca-Cola. Buffett began investing in the company in 1988. He knew that Coca-Cola had a global brand, a product that didn't depend on trends. and a loyal customer base. Decades later, this investment continues to generate substantial returns. Another interesting case is his decision to buy shares of GEICO, an insurance company. Buffett realized that the direct-to-consumer business model was efficient and highly profitable. He didn't worry about predicting the next big innovation in the insurance industry. He focused on the simple: a well-managed company with clear competitive advantages. Practical strategies to simplify your investments. If you want to embrace simplicity in investing, start by applying these 3 practical lessons. Only invest in what you know. Ask yourself, do I understand how this company makes money? If the answer is no, it might be better to look for another opportunity. Avoid over-diversification. Diversification is important, but spreading your money across dozens or hundreds of stocks can be counterproductive. Buffett recommends investing in a few companies you deeply understand. He calls this focused investing. Ignore market noise. Don't let headlines or daily forecasts influence your decisions. If the business is solid, the stock price in the short term is irrelevant. As Buffett says, in the short term, the market is a voting machine. In the long term, it is a weighing machine. You are closer than you think. The secret to success in investing may lie in what you already know. Often, the pursuit of complexity is a form of procrastination or insecurity. But remember, the greatest fortunes were built by those who mastered the basics. Simplicity is not laziness. It is focus, it is intentionality, and above all, it is a way to avoid costly mistakes. By investing in businesses you understand, with clear margins of safety and a long-term vision, you exponentially increase your chances of success. Simplicity in investing doesn't just mean choosing businesses that are easy to understand. It also involves knowing how to act, or rather, how not to act, during times of crisis. For Warren Buffett, patience and discipline are inseparable from a simple approach. After all, investing is as much about human behavior as it is about numbers. Patience as a competitive advantage. You don't have to be a rocket scientist. Investing is not a game where the guy with a 200 IQ beats the guy with a 130 IQ. Warren Buffett. This quote reinforces the idea that the real challenge in investing isn't technical complexity, but the ability to resist emotional pressure. When markets collapse, most investors panic and sell their stocks hastily. But Buffett does the opposite. He sees crises as opportunities to buy shares of excellent companies at low prices. For example, during the 2008 financial crisis, while many investors were fleeing the market, Buffett invested billions in companies like Goldman Sachs and Bank of America. He knew that crises are temporary, but solid companies survive and thrive in the long run. The importance of avoiding distractions. One of the greatest barriers to a simple approach is the excess of information. Today, we are constantly bombarded with financial news, expert analyses, and short-term forecasts. However, Buffett ignores all of this. He prefers to focus on the fundamentals of the business and ask, will this company remain profitable in 10 or 20 years? This long-term focus is an extension of simplicity. After all, it's not necessary to track every market movement if you are confident that your investment thesis is solid. How to find undervalued stocks? Simply, one of Buffett's most famous strategies is seeking undervalued stocks, companies whose prices are below their intrinsic value. But contrary to what many believe, he doesn't use complicated formulas to calculate this value. Instead, he focuses on clear principles. Consistent profitability. Does the company have a track record of consistent earnings? Efficient management. Are the company's leaders competent and ethical? Competitive advantage. Does the company have something unique that protects it from competition, such as a strong brand or low operating costs? Fair price. Is the stock being traded for less than it is worth? Buffett often compares investing to buying a farm. He says he doesn't worry about the daily price of the land, but rather about the amount of crops it will produce over the years. Similarly, he views stocks as ownership stakes in businesses that should generate value in the future, regardless of daily fluctuations. Buffett also reminds us that simplicity is a powerful tool for avoiding mistakes. A notable example is the dot-com bubble in the late 1990s. While many investors rushed to buy shares of tech companies with no profits or solid track records, Buffett stayed out. He explained that he wouldn't invest in something he didn't fully understand. The result? When the bubble burst in 2000, Buffett emerged unscathed, while many investors suffered devastating losses. By embracing simplicity, you not only save mental energy, but also reduce the chances of making costly mistakes. The market is unpredictable, but Buffett's philosophy teaches us that we don't need to anticipate every movement to achieve financial success. It is not necessary to do extraordinary things to get extraordinary results. Warren Buffett. This quote sums up everything we've explored in this guide. Success in investing doesn't require elaborate strategies, but rather mastering simple, universal principles. When you choose businesses you understand, avoid unnecessary distractions, and remain patient, you are following a solid path towards sustainable financial growth. Simplicity is clarity and focus. Warren Buffett's philosophy shows that investing simply is not a limitation, it's an advantage. In a world where people try to predict trends or use complex formulas, those who focus on the essentials and think long-term are better prepared to navigate market ups and downs. Imagine the peace of mind that comes with building an investment portfolio that doesn't demand your constant attention. Think about the power of ignoring market noise and focusing on businesses that create real value year after year. That's exactly what Warren Buffett does, and you can do the same. Whether you are a beginner or an experienced investor, simplicity is a principle that applies to everyone. Start small but with intention. Learn from your mistakes but never overcomplicate things. After all, as Buffett always emphasizes, time is your greatest ally, and the power of compound interest rewards those who are patient. If these lessons resonated with you, it's time to take action. Ask yourself, how can I simplify my investments today? Take the first step and remember that financial success is built on clear, consistent, and well-founded decisions. If you enjoyed these lessons and want to learn more about achieving financial success inspired by great investors, don't forget to like this video and subscribe to the channel. That way, you won't miss any content that can transform your perspective on finance and investing. See you in the next video.